Welcome to Deal Talk, a private equity podcast by Moonfair. Each episode, our CEO, Dr. Stefan Pauls, sits down with leaders from across the industry to discuss their views on the investment landscape, working with portfolio companies, and the lessons they've learned.
Great, and with that, let me turn it over to Moonfair's CEO and founder, Dr. Stefan Pauls.
Pablo, thank you very much, and a very warm welcome from my end to the audience. I must say I'm very much delighted to be here today. It's our first Deal Talk, and there's more to come. And of course, it's no coincidence that we have today a guest here with whom I share a lot of my personal history as well. I'm talking about Johannes Huth, who is running KKR in EMEA. And Johannes is not only, part of my history, he's also, of course, part of KKR's history, but even more so, he's really part of the history of private equity in general. He joined KKR in 1999, and at that time, it was really a niche industry. Yeah? At KKR, we had like 30 people being employed, and the company had around 20 billion US dollar under management. Today, we are talking about KKR as a company that is globally active, with more than 1,500 employees and more than 270 billion assets under management. Johannes has been, running this company in Europe, of course, is an entrepreneur by heart and by mind. And I'm very excited to have you here, Johannes.
Thank you, Stefan.
So, let me kick it off, Johannes, with the first question I have, and I think many people will think about it in a similar way. What we are seeing is, of course, COVID-19. Many people expected a very, deep decline in equity markets. We are seeing government spending and easing from the Federal Reserve banks globally. What is the firm's and what is your personal view on the macro environment?
Well, thanks, Stefan. First of all, I'm delighted to be here, and I'm delighted that Moonfair has been such a great success. As Stefan said, Stefan spent part of his career at KKR, and it was great to have him with us. And I do think this democratization of investing in our industry is a very important step. And I think the Moonfair program is a really great contributor to the broader access into illiquid asset classes. So I really think it's fantastic what you've built there, Stefan. In terms of our view on the macro, I think there's sort of two sides to the coin. First of all, we continue to see an incredible amount of stimulus by all the central banks around the world, and obviously the election of President Biden has added to that, given the 1.9 trillion stimulus program that he's trying to currently get through Congress. So no matter how much of that will come through, there will be, again, a significant amount of stimulus coming into the economy. And we've seen the effect of that stimulus as it's been driving asset prices, and it's been driving the stock market performance around the world. On the other hand, we still have an economy which is in, I don't know if it's in the second or the third phase, but certainly continues to be significantly affected by COVID-19. Large parts of the economy in Europe, and less so now in the United States, are shut down, and that has quite a negative effect. My personal view is, and our view as an institution, is that we will see quite a pickup in the second half of this year as vaccines start to become more and more effective and broadly distributed in a broader fashion. Industry and the economies are coming back. We think that combined with the stimulus will lead to quite a positive effect in the second half of this year.
Of course, look, Johannes, we are following KKR and the industry very closely. And one of the things, frankly, if I go back to 2020, that surprised us and me personally a lot is the unprecedented money that the firm KKR invested in 2020. I remember, back in post-financial crisis times, focus on portfolio investing was, call it over for 15 months, more or less. Now the firm and you have taken a very different route. What was it coincidence was there any strategic rationale behind it?
It definitely was not coincidence. We actually and I think we're almost at the first anniversary, a dubious anniversary. I hope we won't have a second one of when COVID started. We sat down as a firm leadership in March of last year and basically said, look, clearly our number one priority is going to have to be to look after the portfolio, after the assets that our investors have entrusted us with. But we said, in exactly as you just said, Stefan, in sort of the 07-08 period, we missed the beat in terms of investing more aggressively in a period when assets maybe were available at better valuations, and we only focused on managing the portfolio. So this time we went through the same learnings that we had from that period. We had task force, we had literally bi-weekly calls with all of our portfolio companies to make sure that we share demonstrated practices, and we immediately address any issues. But we said, let's take 20 to 30% of our capacity and let's have that capacity focused on making proactive acquisitions. Now, given it was COVID, we were locked down, we were not able to travel to see new management teams. So really, most of the transactions that we worked on were transactions that we had been in discussions with pre-COVID that then had been put on hold. But we went back to the seller and said, look, we are interested in continuing our discussions despite COVID. We'll take a view, a longer term view, and are you interested in entering into discussions with us? And actually, a lot of them did. And I think we made some very interesting acquisitions. And certainly, when I look at the state of the market right now, where prices have risen quite a bit, I'm very happy that we made that decision and we took advantage of that temporary dislocation.
Very helpful. When you think of COVID in general, and look, we are doing this now with Zoom. You're seeing that certain stocks are reaching rocket highs. When you think of COVID and Brexit in general, what is the impact on the investment landscape?
Well, let me take those separately because I think they're actually two quite different things. So in terms of COVID, I think there's going to be some lasting impacts. I certainly hope I'll be traveling a little bit less going forward than the amount of travel that I undertook pre-COVID. I think it's now become quite accepted to raise capital more via Zoom calls than physical meetings. And I think you can do that with partners that you know well. I think if there's new partners, there will still be a lot of physical meetings. But I do think the sort of balance between online and in-person is going to shift and is going to continue to shift more permanently. Clearly, COVID has presented a lot of challenges in terms of local communities, in terms of the companies that we have invested in. And I think it will affect, to some degree, our portfolio construction going forward in terms of what we're investing behind, because some of the themes that we had looked at pre-COVID, I think, have been sort of reinforced through COVID, which is, healthcare, focus on healthcare, a focus on the digital economy, and for us, very much so a focus on ESG and climate. And I think those trends have been sort of reinforced through the COVID time. So I think there will be more that we're going to try to do around those areas going forward as a result of COVID. Now, in terms of Brexit, I think the last chapter on Brexit hasn't been written. If we look at the agreement that has been reached, there's still a huge amount of gray areas where agreement, especially in terms of financial services, where agreements have to be reached in the next 12 months. We're clearly positioned well in terms of KKR, how we are set up, our legal structures to deal with Brexit. And we think it's going to offer some interesting opportunities in the UK that we are going to very much focus on.
To be honest, we are both firms are active in private markets, and what we have seen in the past 10 years at least is an unprecedented value creation that happened in private markets. If you take companies in the technology sector, they are kept longer and longer in private. If you see the valuations pre-IPO or pre-public markets, rocket highs, think of a Palantir or an Uber or so. So many people are asking us, is this going to stay? So far, we have been on the right side, and it turned out to be true that our view is right, that the value creation is very much happening in private markets. There is this outperformance of famous 8% or so on average between public markets and private markets. On the other hand side, we have a record high of dry powder. So what is your outlook in terms of returns for the industry, for the private markets or private equity industry going forward?
So I think, first of all, the outperformance of PE as an industry has historically always been more pronounced in periods of dislocation than in periods of overperformance. So I think, should we get a correction in terms of public markets during that period where the public markets are on a downturn, the private markets have actually outperformed by more than the average. Now, will we get a period of correction? I think the markets are cyclical, and eventually the markets will adjust. But I don't think that's something that we're going to see anytime soon, because just the flow of money that the central banks are pumping into the world economy will certainly keep the current market performance going for some time longer. And if I knew when that would stop, I'd probably be in a different business. So I think that's very difficult to predict. I think all that I can say is that I feel that the trend of more capital coming into private markets will continue because there is this outperformance. I don't think that outperformance is going to change. Is the absolute return that private markets are going to generate adjust? Yes. I mean, quite frankly, it should adjust because if we are saying we're outperforming the public markets by a certain percentage, if public market performance adjusts, in other words, the private markets performance should also adjust. And on the question of dry powder, this is a question that I think has haunted me throughout my entire career. And as you mentioned, when we started KKR in 1999, we were nervous that there was too much capital in the private equity industry. And so every 4 or 5 years, we get this question of saying, well, there's way too much capital in the industry. So far, I think to some degree, the capital that comes into this industry has created its own opportunities. And I think that that's going to continue. And if we look at the number of private companies, for example, that still exist in Europe, there's a very large universe, so that I don't think the opportunities are going to go away.
Johannes, we at Moonfair, and this is a very deliberate, very conscious decision. We love buyout. We love also other asset classes, but buyout is really the core of what we've been doing since the inception of the company. And the buyout segment, interestingly, is increasing when it comes to fundraising. Certain other strategies, growth, venture, are falling behind a bit, and it continues to grow. And we like buyout so much because we are big believers that firms like KKR are playing the playbook of globalization. You have global footprint. You are controlling your own destiny in terms of playing operational playbooks with KKR, Capstone, and other resources you have at hand. What is your view on the specific buyout segment, and why is this segment outperforming probably other segments of the markets like mid cap and small cap?
So I think. Inherently, there's a few things where, when we get a slightly larger company, I think we can attract better management talent. And that's really one of the key differentiators. If you ask a top world-class manager, would you like to come and manage my $50 million company? He's not likely to be interested. If you tell him, look, would you like to come and help us manage this $5 billion company? I think we can really get some incredible talent to help us do that. So I think the type of people that we get to run our companies are more talented, if you will, than without a prerogative to manage of small businesses. There's good managers of small businesses, but I just think we get better global talent. I think by definition, larger businesses tend to be more global businesses, so they're active across more geographies. And that's something where we, with the KKR global footprint and some of our competitors, we can help these people on a global basis. And I think that's another reason for getting incremental returns out of those businesses. And I also think the ability that we have through our own global footprint to identify themes and trends and then find businesses that correspond to those themes and trends, again, help us to generate good returns. And you're absolutely right. If you look at the statistics historically, the buyout sector has always performed best. And especially in Europe, the buyout sector has by far outperformed what we've seen in the venture sector, despite these huge gains that you read about that people generate on the venture sector. Overall, as an industry, the buyout industry has generated better returns.
But we will give the audience, people, the opportunity to ask questions. So if you have those, please prepare them and hand them in. But before we go there, Johannes, going away a little bit from this macro view, we are talking about more micro. So when you think of evaluating an opportunity for KKR, a deal, are there any specifics that you can share? What kind of businesses you like most, what you're looking for, what your current themes are?
So, I mean, that's a good question, and we're very much thematically driven. So we like to identify certain themes that we try to invest behind. And as I said, we do feel healthcare as a sector is a very much a growing sector, and obviously through the COVID period, that's been sort of reconfirmed. So that's an area that we're quite keen on. We invested just last year in Elsan, the largest private hospital business in France. And so these are the type of opportunities that we're looking forward to invest behind that trend. Digitalization is very much another trend. Again, these are not trends that we just came up with during the COVID times that I have to add. We had those before, but that again got sort of reinforced through COVID. And here we've invested in a French public company called Devotim, which is a software business. There is a number of other companies that we've invested behind to take advantage of that sort of trend of digitalization. And it really permeates all industry sectors that we invest behind. And then what I think is really a sort of KKR Europe special is that we have what we call partnership transactions. So transactions where we have invested with a founder, entrepreneur, or a family that owns a business, whereby we come in as a minority or as a majority, really depending on the case, and we help that founder to grow his business further geographically with the full support of what KKR has to offer. And that sort of partnership has really worked very well for us. Quite a lot of the transactions that we've invested in have been along that line. The largest one and most recent one is the Axel Springer investment. We are investing alongside Friede Springer and Matthias Döpfner, and in a partnership transaction to try to help grow that business. So those are probably the three key themes that we've invested behind over the last few years.
Johannes, I have a difficult question for you, and probably you say it's a stupid one, but is there any one deal, and you have done so many deals, countless, any one deal you're most proud of, or which was most, I don't know, sophisticated or difficult to get done?
So I think it's I think it's like to ask which one is your favorite child, right? And I love all my kids, so I love all my deals. And there isn't, they all have different, they all have different challenges. I learned different things from different transactions. Not everything that I've done has worked out. And there's some transactions where we made 16 times our money, so that's probably the most we've ever made on one deal. There's other transactions which were very, very complex. Our recent listing of Hensoldt, the ex-Airbus electronic defense business, where we worked with the German government with a lot of different constituents, which was highly complex. So probably in terms of complexity takes a price. So there's different, I would say, different reasons that I'm proud of different companies. And there isn't really one where I would say that's the deal. Can't pick one. Sorry.
No, then let me come up with an easier question, hopefully to answer. If you could go back in time and think of Johannes 20 years ago, what advice would you give to yourself, being 20 years ago a younger man?
So I think if I could, so first of all, we should have done way more deals 20 years ago because the market was obviously a little less competitive, prices were much lower, and but we agonized over those decisions at the time, found them very difficult. So I would really say to trust your gut instinct. And when I look back, very often we hesitated, we reevaluated, we did a lot of intellectual exercises, went through a lot of information, spent a lot of time to then arrive at the decision that was probably the gut instinct in the first place. And so I think trusting that more would really be one of the key advices.
Thank you so much. I have so many more questions, but I want to give the audience now a chance really to get a voice here and ask questions. So Pablo, if you and Zeke and team read out questions that came up from the audience. I have so many more, but give it a chance now.
Sure. So here comes one. There's been historically an inverse relationship between average private market valuations at the time a fund begins and the fund's eventual returns. Given where valuations are now, could that dynamic create a problem for funds launching this year, Johannes?
Yeah, I think timing in our industry is difficult because, first of all, we have 6 years to invest the capital that we're entrusted with. And as Stefan's just said, we invested a lot of money last year when we thought the conditions were a little bit more attractive, and we're probably going to be a little bit slower this year. So we like to look at where the market is and make decisions based on that. I think it's very tough to sort of say, look, this vintage is more difficult than a vintage that's been launched in a time of dislocation. And the reason is that if we're going to launch a fund this year, we're probably going to start to invest this fund sometime in the middle or late next year. And if we have a correction by then, or maybe 12 months later, the majority of that fund will be invested in that period. So I think that sort of timing game, I think, is tough. I don't think you can really do that. And quite frankly, when I look at what I would consider the most successful investors in our industry, they very much have a continuous deployment approach to their investment thesis rather than trying to time vintages.
Okay, thank you. We have a couple questions related to growth. We'll see if we have time for both, but the first one, following the introduction of KKR's new growth technology or NGT strategy, what are some other areas for expansion for KKR, like long-term capital funds, sector specialized funds, or any other investment strategies? And which ones are you most excited by, Johannes?
So we have a healthcare growth strategy, and I'm quite excited about that. because it's a very interesting sector. I'm getting older, so I'm more interested in healthcare. It's a fund which has had some very good performance. What we have also launched and our first impact fund, and we are now sort of 40-50% invested in that. And then we've looked at a long-term strategy as well. I would say personally, really one of my strategic priorities this year is to have our firm do more on impact and ESG. So I'm very excited that we have a fund there, that we're investing behind this, and I'm extremely interested to continue to drive that theme across everything that we do. And when my vision is that, like today for us, digital is something that we look at across all of the industries that we're investing in, across all of the different funds that we're active in. And really my vision is that that's going to be the same for our ESG strategies.
Okay. With respect to deal sourcing, how would you rate the competition now? Are you seeing, fierce competition for assets? And if so, how are you at KKR keeping the edge?
Yeah, I mean, I think everything is competitive, you just need to look at average prices, which is sort of the statistic evidence of that. And we're trying to leverage our global network, our country presence, our know-how in certain industries, which are really all around the themes that I talked about. And to leverage that, it's our day-to-day business that we try to stay on top of that. But it's a competitive world right now, no question.
Okay, maybe just one more.
Sure.
How would you rate the prospects of technology growth equity investing in the coming years in Europe specifically?
I think it's a very exciting area, we have invested behind some excellent businesses in Europe in our technology growth fund that have performed very well, and I do think we may need a little bit more help from the governments to make startups easier, to make the legal and tax environment more supportive for that ecosystem. And I think there's a lot of things that we're working on with the various governments to give our input into that. But overall, I think it's a secular trend that's not going to go away, and that we're going to continue to try to invest behind.
Great, thank you so much. Stefan, I turn it back over to you.
Look, Johannes, thanks so much so far. But before we sort of close the session, there's one more question that I have, and which is, if you had to summarize your time at KKR in one word, what would it be?
For me, it's fun. I've been having a lot of fun doing what I'm doing. Otherwise, I wouldn't be doing it. No, it's been a fabulous journey, and it's been a lot of fun building the business and working with so many entrepreneurs and exciting people. So that's really the key word.
Okay, I'm so glad to hear it. I asked a friend of mine the same question in a private environment, and his answer was prison. So fun is by far a better one. Thanks so much, Johannes, for your time and for the great insights here. And thanks so much to our audience for listening into our first deal talk. There's more to come. Thank you. Stay safe. Hopefully soon again.
Thank you very much. Thanks, Stefan.
Thanks for listening. For more episodes, search for Deal Talk wherever you listen to your podcasts. Want to know more about investing in private markets? Visit moonfair.com.